Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of November 26, 2012. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. Well, if we look at the bond chart on the screen, we can see that mortgage bonds did drift lower last week as the stock market did rally. So that means mortgage rates drifted higher. So we are recommending locking in your Delaware mortgage rate for the short-term period. That means if you're closing in the next 15 to 30 days. Longer term, we are recommending floating because if you look at the chart, the bond has been trading in a tight trading range. So short term, we could fall lower to the bottom of that, but longer term, we could bounce off of that. Mortgage bonds could rally higher, which would mean rates would move lower. So long term floating, short term are recommending locking in your Delaware mortgage rate. Now, if what we've seen is the economic news is bad, it's going to persist throughout 2013. The job market, labor, unemployment is not going to drastically drop, not for the foreseeable next year. So what we saw was the initial jobless claim last week came in at 410,000. That's higher than it has been. But it's lower than the week before. The week before was 439,000, but they revised that actually upward to 451,000. So that's showing you that, again, the jobless market is getting worse, but a lot of that is from Hurricane Sandy. If you look at the chart on the screen, you can see from November 3rd to the next week, big jump in jobless claims, and that was from Hurricane Sandy. We do see those businesses still shut down, so this effect could last for another month at least. Also, the Euro drama. That's the problems going over in Europe with the debt crisis with the countries there. Started with Greece, then moved to Ireland, Spain, Italy. Germany is no longer willing to try and keep throwing money at Greece to bail it out, so that's going to be a problem we're going to see. We also see Spain and Italy's economies are getting worse. The recession is getting worse as they're trying to dig their way out of this debt crisis. And we just saw Cyprus is the next country to start defaulting on their debt and is requesting a bailout from the European Union. So things are going to get worse there before they get better. But that will actually help the United States U.S. dollar be strengthened. So that'll help the bond market here, which that's why we see mortgage rates staying low through 2013 because of bad economic conditions here, coupled with even worse conditions in Europe. If we look at the inflation, the October core CPI came in very tame at 2%, which shows inflation is low. Again, that's good news for mortgage bonds. If inflation were to tick up, we would see mortgage rates move higher very fast. The next report we saw was housing starts for October 2012. For the third straight month, they actually came in higher. Now, that's housing starts for builders that have started construction on a new home. So builder confidence is strong, and they wouldn't keep increasing building month over month. So they do see a housing recovery. That's why they're building again. And the big announcement was FHA announced, again, they're going to increase the monthly mortgage insurance premium charged on new FHA loans. It's going to go up by 0.1%. Currently, if you're getting max financing, it's 1.25%, so it's going to go up to 1.35%. They also are saying that they may make that mortgage insurance for the life of the loan. Right now, it currently will drop off at 78%, but now they're talking about keeping it for the life of the loan. So, again, making FHA loans more expensive. Now, why is FHA doing that? Because they're projecting $1 trillion in losses from bad loans that were written from 2007 and 2009 that are now defaulting. So right now, it's not funded by taxpayers, so they want the money to come from people that get FHA loans. That's why they're increasing it. In the local news, the next free first-time homebuyer seminar is Saturday, December 15th, and that's in Newark at the Christiana Hilton Hotel. And there's 2 sessions to choose from, 10 a.m. to noon or 1 p.m. to 3 p.m. And then the next one in Dover is Tuesday, December 18th, and that's from 6:30 p.m. to 8:30 p.m. at the Dover Sheraton. You can register for either one of those seminars by giving us a call at 302-703-0727, or you can register online, www.DelawareHomeBuyerSeminar.com, DelawareHomeBuyerSeminar.com. Now, in anticipation of that FHA premium going up in January 2013, if you have a current FHA loan and you are considering at all refinancing to lower your rate and your payment, you need to give us a call right now. The reason why is if we can get you in December and get your case number pulled, you'll be on the old guidelines. If you wait, it will actually cost you that much more on the refinance because you get the new mortgage insurance premium. So give us a call, 302-703-0727, or apply online, www.PRMIDelaware.com, PRMIDelaware.com. Look forward to seeing you next week.